Overall, then this year, what would you say are probably the highest priorities for investors wanting to rotate their capital out of whatever they're in right now? In other words, the biggest movers that you think will shape markets in the next 6 months.
My guess is that the tech space is still going to be the driver of what happens in the market. The sort of tech, AI, and then kind of the adjacent areas, and then kind of everything else. It's almost 50-50 in terms of market cap weighting in the S&P nowadays, in terms of if you include all the kind of tech-related companies now. So I think if you want to have something that's not exposure to kind of that tech space. I think some areas in like things like healthcare, some parts of financials, and some parts of industrials, look pretty good. And I think those are probably areas that you would want to have as part of your portfolio, so that you're not entirely exposed to technology. Because either way, you're probably going to get more volatility in that tech AI space, even if they go up. You're just going to have a lot of risk in your portfolio. So you want to definitely keep some exposure to it for now, because again, that's where the earnings are coming from. But I think the maybe call it the easy money part of the cycle is past, and you're going to get into the kind of the choppier, more volatile part of the kind of market cycle coming up in the next 6 to 12 months. And so I think your portfolio needs to be ready for that. You need to have a little bit of kind of whatever hedging or ballast in there, whether it's cash and bonds or whether it's just other sectors besides tech. Because right now it's basically been tech goes up and everything else goes down, or everything else goes up and tech goes down. So that's kind of your main portfolio construction concern right now.